Okay, so so now we're going to start with the next topic. I think topic 3 or topic 4. I guess is topic 4. Yes, topic 3. Topic 4. So from this topic 4 onwards, we're going to study only management accounting. So in your final exams, you will not see any question related to financial accounting. I will not make any question purposely, but if it has a relation or concept which belongs to maybe belongs to your financial accounting, then okay. But keep in your mind, don't forget your financial accounting. But again, I will not make any question from financial accounting. Regarding your management accounting, so from now onwards, we have I think we have four more classes for accounting. So each class we will cover each topic. So for management accounting, so you're gonna have 4 to 5 topics, all right? So and your final exams only come from management accounting topics. So let's start with the management accounting. Now, what is management accounting? So management accounting, I already gave you ideas what is management accounting in the beginning of your accounting course, which is topic 1, when I explained about what is the meaning of accounting. Okay, but anyway, we recall our first lecture, which is management accounting. Again, purpose of management accounting is to provide financial information to the internal users. Provides financial information to the internal users, all right? And you know what inside the internal users. So could be directors, or it could be employees, managers, workers, whoever is working inside the company, or whoever is involved with day-to-day business activities. Those kinds of people known as internal users. Now we discuss further about management accounting. What actually management accounting do? Management accounting basically involve in planning, controlling, and decision making. All right. So management accounting basically whatever plan company make it. All right. And whatever efforts, informations, or input required to applicable those kind of objective, management accounting provide that. Not just simply providing the informations to achieve the objective, but also track the informations, track the performance. So this is called controlling, performance measurement. All right. So now, so management accounting largely involved into planning, controlling, and decision making. All right. Now, what is planning? Planning is a process that helps to achieve objective. All right. If you do not make any plan, how are you going to achieve objectives? So planning means making any kinds of strategies, any kinds of policy, any kinds of schedule that help us to cope up with the ongoing efforts, right? And it's also help us to implement such methods that help us to achieve our goals. So that is a planning. That's why we do planning, right? Controlling. What is controlling? Controlling is a performance measurement tool that help us to measuring the performance. It's a performance measurement tool. How can we measure the performance? We can measure the performance by comparing two things. One is your goal, your objective, your want, something you want to achieve, and something you actually achieve. Let's say you want to achieve 90% marks in this accounting course, and actually you achieve, let's say, 70%. So it means your performance is not good as you expected because you put efforts to achieve 90% marks, but your results says that you achieve 70%. So it means you did not achieve your objective, which was 90%. So how can you understand you achieve objective or not? So through the controlling, which means measuring the performance. So controlling is the performance measurement tool. And finally, decision making. All right. Decision making means take actions, right? Necessary actions, what company required to make it, right? So remember, planning plus controlling is decision making, right? Planning plus controlling is a decision making. That's the whole idea here. Sometimes we call it planning, and sometimes we call it budgeting. Budget means make plan. Budgeting means planning, right? So that's the whole things for the management accounting. So management accounting largely involved in making plans, controlling or track the performance, and finally making decisions, all right? Making decisions using what we have done in the plan and what we actually achieved. And then we take further. So that's the meaning of management accounting, all right? Now, in your financial accounting, you also look at the scope of financial accounting. Scope of financial accounting is an accounting standard, right? Whatever is happened inside whatever company recorded in their financial accounts, company record as per the instruction or the guideline of accounting standard. However, that do not exactly happen in a management accounting, because management accounting is about the company internal control, internal activities, right? Company internal environments, and different company has a different working environments. Different companies have a different planning strategy or different objective. So that's why we cannot provide the standardized informations to all kinds of companies. We cannot implement such kinds of guideline for all kinds of companies. That's why the scope of management accounting is much more larger, wider compared to the financial accounting. All right. So what is the scope of management accounting? So we need to discuss now the scope of management accounting. Scope of management accounting. In management accounting, first we already discussed, which is planning, controlling, and decision making. Planning, controlling, and decision making. Right, that's we already discussed. Second scope of management accounting is estimate the product profitability. Estimate the product profitability means, for example, this company planning to produce this product, this pen. Before start making production, company need to calculate whether this product is profitable to produce or not. So how can company do that? Company will estimate, company plan for the price as per the markets, right? Or as per the cost. Company will decide the price. Company will decide the cost. Price minus cost is profit, all right? Or company will calculate the cost, because estimating pricing have a different way. Company will estimate the cost. Company will estimate the profit. We call it estimated profit or markup. And cost plus profit is a price, all right? So, and then company will came to know whether if we produce this product, do we have a profit or loss? If product having a loss, company will drop the ideas to produce this product, or company will find the way to minimize the cost, so at least we can have a profit on the product. This is called the product profitability, profitable to produce or not. Next is evaluate the efficiency and effectiveness. Efficiency and effectiveness. Now, what does it mean, efficiency and effectiveness? Efficiency indicates the inputs, efforts, all right? It's very important to identify the efficiency of anything. Efficiency of machine. Is it machine, how many hours, how many product that machine can produce? Maybe efficiency about worker, how many hours worker can produce, worker can work, right? Effectiveness is about the output or the quality. All right, so input or quantity. Let's take example. In one day, how many hours you can study, that represent your efficiency, all right? And in these hours, how many hours you actually focused, that's called effectiveness. So effectiveness represent the quality of something, and efficiency represent the quantity of something, efforts, capability, capacity, you can say that represent the efficiency. Things is so, sometimes we say that, is it so efficient or so productive or not? So it's indicating the capacity, right? So with the help of management accounting, we evaluate the efficiency and the effectiveness of various resources, whatever resources we have available. Could be human resource or could be machines or some other things. Next, scope of management accounting, it's assess, the capital investment. Capital investment means where we should invest our capital, buying assets, where we should buy it. I mean, where we should invest it, which one we should buy. Remember, even though company going to spend $1 single, company need to assess it, where we gonna spend that $1. Let's say, for example, company planning to buy a laptop, the computer. So company has two options. Option one is company either buy a personal computer, which is a desktop PC. Second one is a company buy laptop, right? And then company need to check, company need to assess which one is a more benefit for us. If we need computer for the client acquisitions, meeting clients and all this kind of things, like as in marketing businesses and all these things, then company may prefer a laptop. So company can travel, company can bring that laptop with them. If company much more involved in the storing activities and storing departments and keeping the large files and large information, then PC has a better option compared to the laptop. So this is just an example that before acquiring any resource, before invest any money in any kinds of assets, company has to assess it. Is it really worthy to invest money in these assets or not? So this is called assess the capital investment. Next, it's now company need to evaluate product mix. Now, what is the meaning of product mix? Product mix means when company going to sell more than company going to produce a different types of product. We also call it market segment. So which means company is producing various kinds of product to target various kinds of customers. Like as the best example for product mix is a iPhone, iPad, iPod, iWatch, MacBook, Apple TV, right? So Apple company producing various kinds of product, right? So this is called the product mix, all right? So it's very important for company to evaluate whether we should involve in such kinds of product mix, variety of the product, or we should keep going on only same kinds of product, all right? Because sometimes when you enter in a product mix, you may damage because of that new product, customer may not be happy. So because of that one, it can give a negative impacts on your existing business. And of course, you invested a large amount of money in that new product. If that new product lost, you're going to lose the resources, right? Whatever resources you have invested in that project, right? In that line or in that field. So that's why it's really important to evaluate company product mix strategies, right? And in order to not only the product mix strategies, of course, market that I mentioned here, market research also very important, right? So to understand the behavior of the consumer, the demand, the fashions, the quality, and all these kind of things. It's very important to do the market research. So that's the whole idea, to know the scope of management accounting, right? Now we move on to the next. If you have any question, you can ask me or you can stop me. Let's move on to the next, which is, I need to explain you types of cost, but before types of cost, I just want to recall a few things. You already know that, but I recall again. You know sales, right? Sales means selling product and service, right? Sales minus cost. Cost is the amount of money that company spend to produce and sell product and service. The company spend to produce and sell. To produce and sell the product and service. That's called cost. Right? And this is your profit that you earn after subtracting all kinds of cost from your income. So that's called the profit. You know that. And now profit or loss. Now remember, if sales more than cost, this is profit, right? If sales less than cost, this is loss. And if sales equals to cost, this is called no profit, no loss. In accounting language, we call it break even or cost volume profit. So anyway, break even. So you will also study break even later. So break even means when your sales equals to cost. Company is not making any profit, but any loss too. So it means company keep surviving, a company not growing, because if you want to grow yourself, you have to generate profit, all right, to reinvest, to expand your business. But under break-even situations, you have less probabilities to expand yourself. So you just keep running your business, keep surviving. You're not just dying, right? But you're not growing too. Okay. Now, we will start with the cost. We will start with the cost. You already understand what is the meaning of cost. So in order to, it's very basic things. The money we spend to produce, the money we spend to produce and sell. But now the question is where we spend. Money we spend to produce, right? But where we spend in, how we spend to complete this product, to make it ready to sell it, where I can spend. So in order to understand where I spend, we have to understand the types of cost. Types of cost. Types of cost give us very clear ideas how we produce this pen, where we have spent money to make this pen, all right? So types of cost have a different way to explain the types of cost, but I will use it just two very basic types of cost. So the first is types of cost by operations or by operating, by operations, types of cost by operation, and types of cost by behavior. Right? By operations. By operation, obviously, what is the meaning of operation? Operation means production, manufacturing. Production or manufacturing. Manufacturing. So by operations, cost divided into two parts, all right, which is manufacturing and non-manufacturing. We're going to discuss later. And by behavior, which may be different in a different situation or maybe affect the production. By behavior, cost divided into four parts. All right. Remember when you study last time economics, when I was teaching you perfect competitions situations, profit maximization situations. And in that, when I was explaining you, I also used the word fixed cost and variable cost. And at that time, I said that you will use this fixed and variable cost in your accounting subject. So now it's time to study fixed and variable cost. So fixed and variable cost is a part of behavior, but not only fixed and variable. So we have fixed, variable, semi-variable, and step. So we have four types of cost comes under types of cost by behavior. Right? So we start with by operations, and then later we have a look by behavior. So let's start with by operations. So types of cost, which is by behavior. So by behavior, cost divided into two parts. We have two types of cost. So the first cost is called manufacturing cost. Manufacturing cost. And second types of cost, it's called non-manufacturing cost. Non-manufacturing cost. Manufacturing cost is a cost that belongs to production, that belongs to product. We also call it product cost, right? Or any kinds of costs that occur in a factory. That's called manufacturing. That's called a manufacturing cost. Any kinds of whatever cost belongs to factory, that's called manufacturing cost. Right? Non-manufacturing cost, another name of non-manufacturing cost is a period cost or service cost. Right? Service cost or period cost. And sometimes we also call it office cost. Whatever cost belongs to office, that's called a non-manufacturing cost. So office cost, non-manufacturing, factory cost, manufacturing, right? Factory manufacturing means cost which is part of the production. Oh, sorry, yeah, it's by operation. Yes, I misunderstood, sorry. Yes, thank you. It's by operations. By operations. Sorry, it's by operations. Okay, so manufacturing cost and non-manufacturing cost. Now, manufacturing cost. Manufacturing cost divided into further two parts. Which are direct cost, direct manufacturing cost, and indirect manufacturing cost. So direct cost, direct manufacturing cost is any kinds of cost which is directly involved in production, and indirect cost indirectly involved in production. So directly involved, indirectly involved. Right? So now, direct cost divided into another three parts. Direct cost have another three parts. First is direct material. Second is a direct labor. And third one is a direct expense. Now, direct material. Direct material means when any kinds of material directly involved in production. For example, this pen, plastic, is a direct material. All right. So raw material is a direct material. Because raw material directly involved in production, that's called a direct material. Now, direct labor. Direct labor means, of course, the people working in a factory is a labor, but every labor in a factory is not producing product. So whoever is producing product, that's called direct labor. Now, what does it mean, producing product? Producing product means if any worker working on machine, so that worker will consider as a direct labor. Right? Direct labor means people working on machine. Of course, working on machine to produce product. So whatever money we pay to the worker, that's called direct labor cost. So remember, all these are cost. Third is a direct expense. Direct expense is any kinds of expense which directly belongs to the production, directly affect the production. So the best example for direct expense is a utility, which is electricity or power or fuel. Right? So let's say electricity. electricity or power. Power is electricity, or maybe fuel. If no electricity, no power, how can we run machine? If no machine, how can production? Same thing, fuel. Fuel directly involved to run the machine. So as a result, machine run, produce product, right? So direct material, direct labor, and direct expense are three different kinds of direct cost which belongs to producing product. So this product have a direct cost, direct material, direct labor, and direct expense, right? Next is a indirect expense, indirect manufacturing cost. So indirect manufacturing cost indirectly involved in production, right? So there are three types of indirect manufacturing cost: indirect material, indirect labor, and indirect expense, right? Indirect material, indirect labor, and indirect expense. Indirect expense. So we have three different types of indirect cost, right? So let's start with the indirect material. So indirect material is any kinds of material which is indirectly involved in product. So how can we understand material is indirectly involved? So the best example for indirect material is a material wastage. Wastage means wasting. When you start waste the raw material, waste means destroy. When you destroy, when you damage the raw material, that's become waste. All right, we can't use it. We have to throw away. So that's called indirect material cost. Right? That's the meaning of indirect material, any kinds of wastage. Second is the indirect labor. Indirect labor, anybody is working in a factory but not on machine. Anybody in a factory but not on machine. Anybody working in a factory but not working on machine, that's person called indirect labor. For example, supervisor. Supervisor, maybe security guards, right? Maybe cleaner, or any other person, part of the factory, but not part of the manufacturing, right? Not directly part of the manufacturing. So these are indirect labor. Now, indirect expense, any other indirect expense which is not material, indirect material, which is not indirect labor, it's called indirect expense. Best example is depreciation. Depreciation, rent, insurance, these are indirect expense. All right. Now, indirect cost has another name. Indirect, also we call it overhead. Remember that. Overhead is the another name of indirect cost. Overhead is a combination of indirect material, indirect labor, and indirect expense. All right. So that's all about manufacturing cost. All right. Now, manufacturing cost, we can summarize it in very concise manner. Okay. So now, remember, we already understand what is a manufacturing cost. So manufacturing cost is a combination of three different types of two different kinds of cost: direct cost and indirect cost. Direct cost, direct material, direct labor, direct expense, and indirect manufacturing cost, indirect material, labor, and overheads. So manufacturing cost can be summarized into three costs. We discuss six, three manufacturing, three direct, and three indirect. But we can summarize this six types of cost into three costs, which is direct material, direct labor, and overheads. Remember, it's just a summary. Again, we have a direct expense as well, but sometimes the direct expense we consider as a direct labor or direct material. Sometimes. So, but if you look at the manufacturing cost, generally, manufacturing cost of this pen is a combination of three types of cost: direct material, direct labor, and overhead. That's become a manufacturing cost of this pen. All right, so this is direct material, direct labor, and overheads. Right. Now, so remember, direct material plus direct labor plus overheads. That's become a manufacturing cost. But manufacturing cost, we have another name for manufacturing cost. That another name is a cost of goods sold. Cost of goods sold. Cost of goods sold is the another name of manufacturing cost. So remember that, right? It's your cost of goods sold. No, I mean overheads, not direct expense. That's what I said. Direct expense also part of your manufacturing cost. But if you look at the summary in a concise manner, in a very quick view to look at the manufacturing, so manufacturing cost generally or most of the time is a combination of direct material, labor, and overheads. I didn't write here direct expense because sometimes they consider direct expense as a material or as a labor, right? It depends. Generally, it depends. But basically, manufacturing cost generally part of three different types of cost: direct material, direct labor, and overhead, right? Now, move on to the non-manufacturing cost. So I already gave you idea what is a non-manufacturing cost. Any kinds of service, we also call it service cost, or we also call it office cost, right? So now non-manufacturing cost. So non-manufacturing cost involve marketing and advertising. Marketing and advertising. Marketing and advertising cost consider as a non-manufacturing cost. All right, so whatever money we spend on marketing, advertising, banners, promotions, anything related to marketing and advertising, that is a non-manufacturing cost, and that's also important to sell your product. All right, so you cannot ignore these kinds of cost. Another one is a packaging and labeling. Packaging and label, making any kinds of labels on the product, like as they write some name 0.8 mm, TL08, which is the name of companies, right? So here is a, I don't know, you can see, yes. So this is the label. So they have to put label on the product, right? So people can have a basic knowledge about the product. So like as for example, on food items, they write the nutrition's values and manufacturers and date of manufacturing, so like all this kind of labeling information. Same with the medicines, name of the medicines, manufacturing date, expiry dates, and some basic chemicals they use it in that product. So that's that's called packaging and labeling cost. Packaging is whatever money we spend to pack the product. Next is the delivery and transportations. Transportation, delivery, same thing. Transportation. So let's say you are making your product in America, right? So but you want to sell your product in Vietnam, so you have to transport. When you transport to Vietnam, obviously it's going to be more expensive. Right? So cost will increase. Transportation cost or delivery cost will increase. Right? Sometimes delivery is a free, it depends, but generally transportation costs, yes, of course they added. Already they added if this product is manufactured in Hanoi and they're selling in Ho Chi Minh City. So they already added transportation cost in this product. Right? Next is a administration cost. Administration cost. Administration cost is any kinds of cost which belongs to office things. So what inside administration cost? Administration cost involved salary of office people, salary of office people, office staff or office people, whoever is working in the office, right? The salary of that person is the administration cost, maybe account department, marketing department, human resource department, IT department, all right? So sales department, finance department. So the people who are working in all these departments, we have to pay salary to those people. So that salary is the administration cost. Right? Next is maybe some other office expense. Office expenses. Office expenses. Office expenses involved. So we have office expenses. So office expenses, we have utility, power, electricity, water, right? Maybe renting an office. Not every time we buy office, we rent it, depends where is our office. Next is a depreciation. Depreciation for office items, right? Depreciations for office items. So office have an air con, which is machine. Depreciation on air conditions, right? Office has a TV, computers, printers, maybe photocopy machines, right? Any kinds of equipments or machine we are using on which we have a depreciations, that depreciation expense is an administration expense, right? And obviously we have some kinds of insurance. We buy insurance for office assets and we have to pay insurance, right? So that insurance also your administration cost. So now keep in your mind, if all these kind of expenses like as utility, rent, depreciation, insurance, if you are spending all these kind of expenses for office, that is a non-manufacturing cost, right? If you are using all these expenses in a factory, that will consider as a manufacturing cost. Could be a direct expense or indirect expense, all right? But it depends. So depreciation could be a manufacturing cost or could be a non-manufacturing cost. Depends, is belongs to office or is belongs to insurance. I mean, it belongs to the office. Right? So that's all about the types of cost. Types of cost by operations. So types of cost by operations is finished. Anybody has any question? No, we consider indirect cost. You mean direct expense? So you asked me questions. So when we summarize manufacturing cost, we do not consider indirect cost. No, in manufacturing cost, this is your indirect cost. That's your indirect cost. Indirect cost. As I said before, if you remember the previous slide that I used it before, indirect cost. I said that another name of indirect cost is the overhead. And indirect cost, obviously, combination of three types of cost. Indirect material, indirect labor, and indirect expense. So combination of indirect material, labor, and overheads. Oh, sorry, indirect material, indirect labor, and indirect expense is overhead. Right? So did you understand? Why don't we plus direct expense in manufacturing? Okay, as I said, direct expense is a part of manufacturing cost, but sometime we do not, let me explain you. Yes, direct expense is a part of manufacturing cost, but I'm not saying direct expense is not part of manufacturing cost. Yes, of course, it's part of manufacturing cost, but it's just a summary. It's summarizing manufacturing cost in a three different parts: direct material, direct labor, and overhead, because these three types of cost are significant cost of your manufacturing process: direct material, direct labor, and overhead. But direct expense may not be significant involved in manufacturing, but it doesn't mean that we will ignore direct expense. No, we do not ignore direct expense. So if direct expense is an insignificant expense, small expense, we may consider as a material cost or may consider as a labor cost. Generally may consider as a labor cost, because labor involved in using utility to make that product. All right, because worker is working on machine, right? Worker is working on machine. If worker is working on machine, worker consuming that utility to run that machine. Worker is controlling that machine by in a use of electricity. Right? So that is the reason. But again, I'm not saying direct expense is not manufacturing. Yes, of course, definitely 100% direct expense is your manufacturing cost. But because of due to the size, we do not summarize it when we look at the summary of manufacturing cost. So understand, yes or no? Can we move on to the next? or any question? So let's move on to the next, which is types of cost by behavior. So next is types of cost by behavior. So let me sign out and sign in. Otherwise we will stuck. Okay. So now we start with types of cost by behavior. Here, the behavior has associations with the production level. All right. So in these types of cost by behavior, we will have a look that what will be the behavior of the cost when production increase or decrease. All right. So what does it mean by behavior? Under by behavior, we measure the cost level at different types of production level. Measure the cost level or cost behavior. I think better we should write cost behavior, that most appropriate definition. Cost behavior. Cost behavior at different level of production. So it means when the production is increasing, decreasing, when production is changing, how cost will react. What will be the reaction of the cost? May increase, may not increase, but increase too much or less increase, and so on. That's called the types of cost by behavior. So now you can get the ideas. Here we're going to study about fixed cost and variable cost, because fixed cost, variable cost also kind of cost behave, like as in variable cost behave as per the level of activity, level of productions. But in fixed cost, cost remain unchanged. So behavior of the cost is constant, right? Under fixed cost. Okay, so let's have a look. So 4 different types of cost we have here. So okay, so let's start with the first, which is fixed cost. Fixed cost. Now, what is the meaning of fixed cost? Fixed cost is the cost remain unchanged at different level of production. So which means you increase production, you decrease production, or you do not produce anything. Your cost remain fixed. Your cost remain unchanged. All right. Cost remains unchanged at different level of production. At different level of production. So it means, as I said, cost do not change. Cost do not change. That's why that cost called fixed cost. So now let's have a look at the graph of fixed cost. How that fixed cost looks alike. So your fixed cost looks like this, right? That's your fixed cost. Again, your x-axis, you have quantity, and y-axis, you have a dollar cost. That's a cost. So that's your zero here, right? And you can have a look. You can have a look. So that's if you produce, let's say, one quantity or two quantity, three quantity, or maybe four quantity. So that's your quantity. Let's say 1, 2, 3, 4, right? 5, 10, 20, 5, 10, 15, 20, 25. So that's a 20. So 5, 10. So you can see that if you produce one, your cost is 20. You produce 4, your cost remain unchanged, which is 20. So which means you increase production to 4, you decrease production to 1, or you make your production 0. Your cost always 20. That's called fixed cost. Increase or decrease or 0 production, but still we have a fixed cost. That's called fixed cost. So now what could be example of a fixed cost? So the example of fixed cost is a depreciation. Remember, I'm talking about manufacturing. So depreciation. Depreciation is your fixed cost. Rent is your fixed cost. Insurance is your fixed cost. So these are mainly your fixed cost. Depreciation is a fixed cost. Why? Because let's say your motorbike has a depreciation. You run more motorbike. Do you have more depreciation? Of course not. You do not run motorbike. Motorbike value will not reduce. Of course, it will reduce. So that's why you run motorbike too much, you run motorbike less, or you do not run motorbike. Your motorbike value always goes down time to time. That's why fixed cost. Same thing with the rent. For example, you're paying a rent. You're paying a rent for your house, for your room, right? So you pay, let's say you pay rent for 30 days, right? So you live 1 day, you live 5 days, you live 20 days, or you live 30 days. Your cost is same, right? You go hometown, you come back, your landlord doesn't care. The cost remains same, right? You don't stay in that room, landlord doesn't care. Still, you have to pay money. That's called fixed cost. Same thing with the insurance. You have to pay insurance. you buy insurance to protect, to secure the assets, right? So you have to pay insurance time to time, right? Insurance expense. This is your fixed cost. So another example of fixed cost from financial accounting point of view, a fixed cost could be interest. Interest that money we borrow from bank, we have to pay interest. That could be a fixed cost, but that interest may not be a manufacturing cost. So here we are discussing about manufacturing cost. Now, next is a variable cost. Next is a variable cost. Variable cost. Now, what is the meaning of variable cost? Variable cost is any kinds of cost which change as per level of production. Different cost at different level of production. Right. Cost changed at different level of production. Cost change at different level of production, that's called a variable cost. Right. Cost doesn't change, cost which is change. So how variable cost looks alike? The graph of variable cost. So that's your variable cost. So here you're again quantity, x-axis quantity, y-axis you have cost, right? And that's your, let's say, 1, 2, 3, 4. So you can see, so if you produce 1, 2, 3, 4, 5, 10, 15, 20. So this is your quantity, product number of product 1, 2, 3, 4, right? And that's your cost, $5, $10, $15, and $20. So let's say you can see if you produce one product, your cost is 5. You produce 2 products, cost 10. 3 product, 15. 4th product, so maybe that number, right? So that is your variable cost. If you do not produce any product, zero cost, right? So that is your variable cost. Production increase, $1, 1 unit, $5, 4 units, $20. So high product, high cost, low production, low cost, 0 product, 0 cost, right? So this is your variable cost. Now, what is the example of variable cost? Variable cost examples could be a direct material, direct labor, and direct expense, right? Direct material, direct labor, and direct expense. So direct material, direct labor, direct expense is the part of your variable cost. So 3 types of cost we have, right? So variable cost is finished. Any question? Variable cost, fixed cost? Now, is that clear? Because some of you were quite confused during your economics class. Tell me any questions or move on. Any question or move on? So move on. Move on to the next, which is semi-variable cost, or you can call it semi-fixed cost. It's up to you what you want to call. It doesn't matter. So you can call it semi-variable cost, semi-variable cost, or semi-fixed cost. Anything. Semi-variable or semi-fixed means some fixed, some variable. That's called semi-variable, right? So semi-variable cost is the cost which is the combination of both, which is fixed and variable. Semi-variable cost is a combination of both, which is fixed and variable, right? So how semi-variable cost looks alike, and then I'll show you example. Semi-variable cost looks like this and this. This. So same thing here. That's your quantity. That's your cost. Right. That's your quantity. That's your cost. Now, it's a combination of fixed and variable. So it means, so let's say from 0, here is 0, and this is 1, no, 10, 20, 30, and 40, 50, 60, 70, 70. So from 0 to here, no, I think I shouldn't write it 10. I think I should write here 0 to 40 is fixed. 0 to 40. Zero to 40 is a fix. So this one, that's your fixed cost, right? And that's your variable cost, because fixed cost is like horizontal, right? And variable cost is like vertical or just going upward, right? So now you can see 0 to 40, it's a fixed cost, but after 40, if you start producing, start consuming, your cost is increasing. But from here to here, it's a fixed cost. Here to 40 is a fixed cost. Now, what could be example of semi-variable cost? I think the best example of your best example of semi-variable cost is your 3G mobile, 3G internet. 3G internet. How? For example, you recharge 100,000 Vietnam dong, right? You charge 100,000 Vietnam dong for 1 month, and company, for example, is giving you 2 gigabytes, right? What does it mean? You use 0 gigabytes, you use 1 gigabytes, you use 1.5 gigabytes, or you use 2 gigabytes. Your cost is fixed, do not change. 100,000 Vietnam dong fixed. But if you cross the limit, right? If you cross the limit, so let's say your internet is finished, 2 gigabytes finished, and you receive a message from company, but you still keep using your internet. If you're still using your internet, your mobile phone balance, whatever money is in your mobile phone, whatever money you recharged in your mobile phone, that balance will start reducing. So it means companies start charging money. So your cost start increasing if you cross the limits, all right? So from here to here, it's a fixed. But if you cross the limits, then if you cross the limits, here is no limit, so that's why it's 0. You use internet or you don't use internet, it's a fixed. But when your limits finished, then 1 extra MB cost increase. One extra MB cost increase. Another extra MB, another cost. Third megabytes, cost increase. Cost increase. All right. As you are consuming more, so let's say 70. So 70 is your semi-variable cost. In this 70, 0 to 40 is fixed, right? And 40 to 70 is variable. So $70 is your semi-variable cost, which is combination of 40, which is fixed, and 30, which is variable. Fixed and variable both. All right, same thing here. You are using internet. 100,000 Vietnam dong is fixed. But after 100,000 Vietnam dong, you're still using, you use maybe 20,000, 30,000 extra. So 130,000 is your cost, total cost of using internet. So in this 130,000, 100 is fixed and 30,000 is variable. So 130,000 is semi-variable, right? So understand semi-variable? Okay, so now what could be example of semi-variable cost? So the salary of sales staff. Sales staff, salespeople, sales boys, sales girls, right? Salesmen, saleswomen. These people, salary is a semi-variable cost. Why? Generally, company give them salary, but the salary of basic salary or fixed salary every month for salespeople are quite low. Like as maybe, I don't know, 5 million Vietnam dong, 6 or 7 million, or maybe 10 million Vietnam dong for 1 month, right? But they have an opportunity to make more money by selling more product, because their salary, additional salary, tied to the product, right? If you're selling more product, you're making more commission. So we call sales commissions. So basic salary, which is quite low, 5 or 10 million Vietnam dong, plus sales commissions. So we're gonna adding the sales commissions. Is that possible? Is it possible when fixed cost comes after variable? Yes, it is possible, because variable, Variable cost cannot be fixed. Variable is keep increasing, keep using, your usage is increasing, your cost is increasing. So variable cannot come after fixed. Fixed cannot come after variable. Fixed always come first, but fixed come with the limit. You access the, if you cross the usage, then your cost increase. And remember, in semi-variable cost, once a time your cost turns into variable cost, it cannot be fixed. If you keep using, your cost keep increasing. There is no any limits unless you finish your mobile phone balance, right? Like if, for example, in your mobile phone, you have 1 million Vietnam dong, your mobile phone balance in your money. You charge your mobile phone 1 million Vietnam dong, right? And you also have 3G internet, which is 100,000 Vietnam dong for 2 gigabytes. Now 2 gigabytes is finished. If you keep using, so your balance is 1 million Vietnam dong. If you keep using more, your 1 million is reducing, right? Cost is increasing. So that's why variable comes after fixed cost, not before fixed cost. All right. If it's come before fixed cost, it won't come. It's never happened. Variable and stop production and then fixed. This could be happen in a next example, next type of cost, the fourth cost, which is a step cost. That maybe happen, but it's maybe a little bit different. So that's the whole idea for semi-variable cost. Now understand semi-variable cost. Let's move on to the fourth types of cost. So we have 4, 1, 2, 3, 4. So fourth types of cost is a step cost. Step cost. When variable cost keep going, is there any C price ceiling to, no, actually ceiling price, floor price are price. They are price. We are talking about cost. Price means when you sell to make money. We are not selling anything here. We're simply making things. It's a different than the pricing system, that question you asked me. All right. Yeah, so we're discussing about cost, not about the price. So the ceiling and floor is a price. Okay. Now, step cost. What is step cost? Step cost also combination of fixed and variable. So it's a combination of fixed cost and variable, but both cost, fixed and variable, occur simultaneously. Simultaneously. Simultaneously means parallel, right? Parallel. Parallel. I guess I thought so. Parallel. Parallel means each other together, right? But in semi-variable cost, both costs occur, but both do not occur parallel, simultaneous, right? Simultaneously. Under step cost, fixed, variable, fixed, variable, fixed, variable. But under semi-variable, fixed and then only variable. All right? Fixed, when fixed is finished, then we have only variable. Then if you're consuming more, your variable cost will increase more. You will not get fixed cost again. You never get fixed cost again under semi-variable cost. But under step cost, both costs occur at the same time. Fixed, variable, then fixed, again variable, fixed, variable, right? So this is your step cost. So how step cost looks alike? So fixed, variable, fixed, variable, fixed, right? So this is your step cost. It looks like step. And remember, this is your fixed, all right? So let me write down here. That's your fixed cost. Fixed, 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 and fixed. Right. I hope you can see that blue, oh sorry, yellow. And this one, green one. This, your variable, right? So blue, green is variable cost, right? All the greens. And yellow is a fixed cost, right? So you can see that this is your fixed, 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 right? Fixed. Variable. Variable means cost increase. So variable, right? It means cost. This is your cost, right? Cost will increase. So variable, 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 right? It's a fixed, it's a variable. Right? And let me define more so you can understand it. Yes, I mean, if I make like this, it doesn't look like step. Okay, the graph, so how can I make graph like this? So if you, like you said, how can I make fixed variable, fixed variable, fixed variable? You can call it if you want it. You can call like this, fixed variable, fixed variable. But this one, instead of saying this one is match, it exactly look like steps. But again, the important is the cost. Cost is increasing. Cost is increasing. There is a reason. It's not like this. So there is a reason. I will explain you why is this, why not this. Right? I will explain you. Now, what could be example of a fixed cost? Oh, sorry, step cost. Step cost example is your motorbike tire. Right? Motorbike tire. How can we understand the life of motorbike tires? life of motorbike tires depends upon kilometers. Let's say the life of motorbike tire is 10,000 kilometers. So 0 kilometers to 10,000 kilometers is the life. And cost of one tire is $100. Cost of one tire is $100. So now this is 0 kilometers and this is 10,000 kilometers, 20,000 kilometers, 30,000 kilometers, 40 and 50. This is your kilometers, right? Quantity, right? And this is your cost, right? If your motorbike run 0 kilometers to 10,000 kilometers, your cost is fixed, which is $100, right? Your cost is fixed. But if your 10,000 kilometer finished, it's time to buy another tire, second tire. So cost of two tires will be 200. 100 and 100 become 200. So 200. Cost of second tire. Second tire, second limit. 10,000 kilometers to 20,000 kilometers. So you can see 10,000 kilometers to 20,000 kilometer cost is fixed. Now 20,000 kilometer finished, cost increase, not increase, right? Cost increase. If you cross the limit, cost up. That's why cost increase, I write like this, not like diagnosis, like you said, right? 300. Cost increase 300. All right, and 300 gives you another limit, which is 20,000 to 30,000, right? Which is 20,000 to 30,000. 30,000 finish, cost increase. Another limit, cost increase. Another limit, cost increase. That's why it looks like steps. But remember, within a limit, this is limit. This is limit. Within a limit, cost is fixed. But if you cross the limit, cost increase. Then your cost increase, it gives you next limit. All right, it gives you next limit. That's why this is like this. So this is called a step cost. So what could be example of step cost in a company? Company point of view, what could be example? Yes, tires or wheels could be example because company have vehicles. It could be truck, cars, whatever vehicles company using, right? So vehicles could be example of step cost. And another good example is the supervisions or supervisor. Supervisor, indirect labor, especially supervisor, not all indirect labor, supervisor. What is the role of supervisor? Supervisor role is to supervise a people. And again, one supervisor can supervise only limited people. One supervisor means cost. One supervisor, you pay $100. So one supervisor can supervise maximum, let's say 50 people. But when limit is above 50, you need second supervisor. All right. So 100 workers, 2 supervisor, but limit is more than 100, 3 supervisor. More than 300, 4 supervisor, because one supervisor limit is 0 to 50. Same like as teacher. Teacher teach only a limited students. If you take example of your faculties, limited students. So that could be, I guess, I don't know, it's like 30 or 40, let's say 40 students maximum. If it's more than 40, they will convert into 2 classes, all right? Or class capacity. In one class, we have, let's say 40 chairs. If students are more than 40 chairs, if the students are more than the rooms requirements, we may shift to the bigger rooms. Let's say we don't have bigger rooms, or we shift into 2 rooms, 20 students, 20 students. If it's 60 students, then 3 rooms, right? 80 students, 4 rooms, 100 students, 5 rooms, all right? So this is called a step cost. So did you understand step cost? Everybody understand step cost? Yes or no? Okay, so let's move on to the next. Okay, so that's all for the types of cost. Now, types of cost is finished. So topic 4, yes, topic 4 is finished. So anybody has any question regarding this topic? Anything you did not understand regarding what is the meaning of management accounting? What are the scope of management accounting? What are the types of cost by behavior, by operations, which is manufacturing, non-manufacturing, by operations, and by behavior, fixed, variable, semi-variable, and step cost. So the types of cost are finished. So make sure you remember these types of cost, because in next lecture, which is topic 5, so we're gonna study profit by using all this type of cost, by behavior, right? By behavior or by operations. So by behavior, we focus on fixed and variables. Or let me explain you one more time. When you look at the types of cost by, so total cost. So remember, by behavior, total cost is a combination of fixed cost plus variable cost. Again, we have a semi-variable cost and step cost as well. But if you look at cost in very detail, yes, by behavior, cost divided into 4 parts. But if you look at the overall, fixed plus variable is the total cost. Same thing that we study in our economics class, average total cost or average cost. Right? That is your fixed and variable. And by operations, total cost is a combination of 2 types of cost, which is cost of goods sold plus non-manufacturing cost. Non-manufacturing cost, right? That is your total cost, right? So total cost by behavior, total cost by function or by operation. Sometimes we call it by functions because company has the 2 main functions, manufacturing and non-manufacturing, right? So sometimes we call it by operations or sometimes we call it by functions, right? So we have 2 different kinds of cost, right? So in our next lecture, we're gonna learn how to calculate profit if we use cost by behavior. And how to calculate profit when we recognize cost as a by function, by operations or by functions. Right? So these 2 things we're gonna learn in next lecture. So we have 2 methods. One method is this, we call it marginal costing method, and this is absorption costing method. So these 2 methods we will study in our next topic, which is topic 5. Right? So, any question? Anybody has any question? Yes or no? Say something. Any question? Yes or no? All the cost by behavior is manufacturing? No. Not all cost by behavior manufacturing. This could be manufacturing. This could be non-manufacturing. By behavior, we do not categorize, is it by manufacturing or by non-manufacturing? Fixed could be manufacturing. Fixed could be manufacturing, non-manufacturing, both. Like here, fixed. Fixed could be manufacturing cost, like as depreciation. Rent is a fixed manufacturing, right? And fixed cost could be non-manufacturing, like as salary of office people, depreciation for office. All right. So now remember, Fixed. Fixed cost could be manufacturing and non-manufacturing. All right. Variable could be manufacturing and non-manufacturing. All right. Manufacturing could be fixed and variable, and non-manufacturing could be fixed and variable. All right. It is not mean that all fixed cost is a manufacturing. No, it could be manufacturing or it could be non-manufacturing. Like as for example, fixed manufacturing. I already give you example of what is fixed manufacturing. Fixed manufacturing could be depreciation, could be rent, could be insurance. And fixed non-manufacturing, office depreciation, office rent, office insurance, office people's salary, because that also fixed, right? Variable manufacturing. Variable manufacturing, direct material, direct labor, direct expense. Variable non-manufacturing, marketing and advertising. Marketing advertising is the non-manufacturing. Is it variable or fixed? It's variable. Why? You do more marketing, you sell more product. You do less marketing, you sell less product, right? Same thing, transportations, non-manufacturing. Variable. You want to sell more product, you do more transportations. Packaging, labeling. You produce more product, you need to more pack, more label, right? Same thing, manufacturing, fixed cost. You know that. What are the manufacturing fixed cost? Manufacturing fixed cost, same. Depreciation, rent, insurance. Variable, same here, right? Non-manufacturing fixed cost, same. Non-manufacturing fixed cost, same. Right? And non-manufacturing variable, non-manufacturing variable, same. Right? So it's like this. All right. Understand? Yes or no? Any question? Anybody has any question regarding this topic? Okay, no questions. So we stop here. So I'll see you. Some of you will study Saturday and some of you will study next week. So anyway, I'll see you next class. Right, so thank you. Bye-bye.